Okay, let's go ahead and reconcile our credit card statements for June. So here it is. All right, make sure we select our credit card. Here it is. All right, our ending balance. Okay, ending date. All right, do we have any finance charges? All right, let's take a look. We do, right? $39.74. All right, this entry right here, once we move forward in complete reconciliation, we'll book the transaction. Very important to understand what's going on. Well, our expenses for interest and finance charges will go up, thus they have to be debited. What else is happening? Our credit card balance, because they'll basically add this amount to the balance on our liability on our credit card, and credit card being a liability goes up when it is credited. So here it is, this amount right here, even though we're entering it once, it is both a debit and a credit. It is a debit to account 61,700 right here, and it is a credit to account 21,100 right here. So let's go ahead and start our reconciliation. Okay, you can see that this one is already marked off, so we can mark it off on our statements. Okay, what else do we have? Well, here's our transactions that we can start marking off. Okay, and then we have our payments, right? Payment right here. And then the return is right here. And we're at 0, right? And that's what we want. So now we're going to finish it up. All right, and then we'll just look at the report real quick. Okay, here it is. Let's make sure we compare our balances, matches, all right? Here's our payments and returns right here. And our transactions right here. All good to go. Our finance charge is right here. So we would go ahead and print this one, attach it to the credit card statement, and we're done reconciling credit card statement for the month of June. Okay, let's go ahead and reconcile our bank statement for the month of June. So here it is. Make sure that it's selected right here. All right, our ending balance. Okay, our ending date. All right, do we have any service charges? Yes, we do, $25 right here. Again, similar as before, once we move forward in complete reconciliation, this will become an entry, so let's make sure we reflect it. What's going on? Our expenses on bank services are going up. The expenses go up when debited. What else is happening? Well, they will take that money out of our bank account, so the balance on our bank account will be reduced, right? And bank account is an asset, it's reduced when credited. So this amount, $25 right here, it is a credit to account 11,100, and it is a debit to account 61,600. Okay, let's start reconciliation. Okay, we can see $25 right here. We can mark that off. What else do we see? We see our checks, right? Makes sense. We booked those. What else? We have the bank transfer when we paid our credit card, remember? So we can mark that off. What else do we have? Well, we're not in balance yet because we still have the merchant account fee to book. We still have some draws that we took the money out of the business, right? And then we have some deposits that we got to book. So let's get on it. It's pretty straightforward, but again, we make sure that we solidify our knowledge. So first, let's go ahead and book our deposits. Again, what we'll do in this case, we'll do lump sum booking, and we can essentially book the whole transaction because we know all of these go against sales. So we can go ahead and do that to save us time since we're in the catch-up mode. When we would book it as the end of the month transaction. Okay, so that's our, that's the tag. Okay, so that's received from our sales. Oh, that's customer. So from our customers, account impacted is sales. Okay, description, that's our June sales. All right, that's combination of both cash and merchant account. And we're going to book the whole amount, and it is conveniently, summed up right here because all deposits and other credits that are right here, we know they're all sales, so we can go ahead and do that. We wouldn't be able to do it if, let's say, the owner lent some money, or we borrowed some money, or we invested some money. Then we would have to segregate it. But in this case, we can go ahead and book it all into this against the sales account. Okay, so here it is. Everything is good to go. Let's go ahead and make sure we understand what's happening. We do know that our bank account balance will increase. And being an asset, it goes up when it is debited. What else is happening? Well, this money is coming from our sales, from our revenue, account 41,100. And sales / revenue, they go up when they're credited. So here it is. Debits and credits are in balance, right? This amount right here, it is a credit to account 41,100. Therefore, sales revenue go up when they're credited. What else is happening? This amount right here is a debit to account 11,100. That's our bank account. It's an asset, right? And assets go up when debited. So this amount right here is a debit and increases our bank account. Okay, saving new. Okay, let's close this. And again, we're back in our reconciliation. We can see that transaction being booked. All of these we know add up to this, right? Because bank statement conveniently adds it up for us, so we can mark this off and then mark all of this off. Okay, what else do we have? Well, we also have the draw that we got to book, and we got to book this expense. Multiple ways we can do it, right? So for example, the expense transaction we can book through the expense module, right? So who pays us? We pay the Bank of Lakes. Again, we're not doing it through the credit card, we're doing it through the bank. Okay, so payment is 628. And in this case, it's bank transfer because they take it straight out of our bank. Again, it's a merge fee. All right, merchant account fee, merchant fee. Let's make sure we update the amount. All right. So what's happening? Well, we know that our merchant account fee expense goes up. That's the money bank charges us for processing credit card payments from our customers. And we know that expenses go up when debited. So here it is. What else we know will happen? Well, they'll take that money out of our bank account, and being an asset, it's reduced when credited. So, right, and that's account 11,100. So again, debits and credits are in balance. This amount right here, it is a debit to account 61,500, and it is a credit to account 11,100. Okay. So we can close it, and here it is. It shows up right here. What else do we need to book? Well, we're still not in balance, right? And we know because we took some money out of the business, so we got to make sure that we book that. Again, there's multiple ways that we can do that. Well, we can do it with transfer. Okay, so we're going to take it from our bank account, right? And we're going to put it to draw. And we can lump sum it together, right? That's pretty easy. So together, That's our 7,000 and then 350. So it's 7,350. And we can use the end of the month date to book it. That's our June draw. All right, so once we book it, what will happen? Well, we know that our bank account balance will be reduced, right? And it's reduced when it is credited. What else is happening? Our equity will be reduced, right? So members draw is an equity account. It gets closed into our equity balance at the end of the year, right? So this is equity. Equity is reduced when debited. So this amount, even though we enter it once, right, it is both a debit and a credit. It is a debit to account 3,700, and it is a credit to account 11,100. Bank account 11,100 will be reduced because it's an asset, so it gets to be credited, and equity is reduced when debited. It makes sense. We take money out of our business, right? Our bank account balance goes down, and our ownership in the business goes down as well because we're taking the money out. So saving you. Okay. So here it is. It shows up right here. We're at 0. Let's make sure we reflect it. Okay, so we're going to finish it now. So we can do reconciliation report right here. All right, let's make sure everything matches. Yes, balance matches. Transactions, deposits, we can compare it to this lump sum right here that matches. Okay, our transactions, our checks are all there. That's good. Okay, our $25 right here, our merchant, and our draw. Everything is here. We're good to go. We would print it, attach it to our bank statements, and we're done with reconciliation of June.